Hi everyone, Daniel Kurkowski with VSM Commercial here, joined today on Minnesota Deals by Mark Robinson. Mark, how are you, man?
I'm doing great, Daniel. Thanks for the invite.
Yeah, so Rafiq is out of the country right now, so Mark graciously agreed to step in as co-host. And just a little background, Mark is a CCIM. You're the vice president of the CCIM?
Yes.
For Minnesota Dakotas?
Yep.
And you're on the board at Mincar as well, right?
Correct. Yep.
And a principal at Mid-America, one of the premier retail brokerages in the Midwest, right?
Right, yeah, we've got 4 offices.
Yeah, so he knows a thing or two about retail, commercial real estate, to say the least. And yeah,
Sure, appreciate that.
modestly, the Minnesotan in him just shrugs it off. But what we wanted to talk a little bit today is kind of the 101 of retail investing. And we haven't really had a chance to get into the specifics of any particular asset group before. So having you here is going to be, I think, really beneficial for me to learn, for the audience to learn, for young Isaac to learn behind the camera. So, first question, I'll kind of go with the big one. A lot of people I'm noticing are concerned about the retail market in general. They're like, Amazon's taking over. They're just afraid of retail real estate. What's kind of your perspective on that?
Right, so, we're in headwinds of change right now, right?
Mm-hmm.
So talk to any investor right now, and they're scared. If you don't know much about retail, if you don't own it already and have a lot of exposure to it, you're probably not looking at it and going, I can do office or industrial so much easier without really knowing anything about it. And maybe that provides more opportunity for people that know what they're doing in retail. But we've seen dramatic changes in the capital markets for people looking at retail, and so the core product.
How so?
So the core product, and what I mean by core is like Class A urban, high street retail. Well-positioned properties like on France Avenue, for instance, or some of these other good areas. There's still a lot of demand for product, and these are larger deals by and large, that institutional and pension funds are buying.
Yep.
But if you're not that grade A, irreplaceable real estate that's always going to have a good level of demand, it really has fallen off from investor demand there, particularly as it relates to the power centers where you've got a lot of large mid-box anchors, the Bed Bath Beyonds of the world, and Kohl's, and these sorts of properties. We've seen a huge decrease in pricing there, and I suspect that'll continue to happen. Whereas I think most of my transaction happen in the neighborhood retail, so kind of $1 to $10 million product, and demand there is still pretty good because it's just kind of bread and butter retail. It's service oriented, serves the neighborhood. It's got your hair and nail salons and your restaurants and
places
whatnot.
that people they need to go to them. They need a brick and mortar location. You can't get your nails done online yet. I'm sorry.
Not yet. Right.
Yeah.
Right.
So sorry, one thing I neglected to mention as well is you're also an investor in real estate. You own real estate yourself.
Yep.
And I'm going to assume predominantly retail. Right?
Very good. Yes.
Yeah.
So
Okay.
I've got, practice what you preach. So yeah, I've got a few multifamily and single family investments, but for the most part, it's just retail. So shopping centers and single tenant.
Nice.
Deals. So yeah.
So someone like me who's relative, I bought my first retail building recently, and we walked through it.
Yeah.
That was an easy deal. That was already leased up. A lot of the times, we're looking at doing value add. We're buying something with a little bit of vacancy, put a tenant in, increase the value. What do you look for in those types of deals to feel confident that they're going to work?
Here's the title of our podcast, right? It's like Retail Investing 101,
yes.
right? So, so let's talk about kind of what makes a good shopping center. As I alluded to you years ago, I read this book. It's called The ABCs of Site Selection.
Got it.
You can find it on Amazon. It's a quick, easy read.
Written by Mark Robinson?
Not yet. No,
Not yet.
That's like the 18th edition. Yeah, I'll get to that.
Yeah, nice.
So they, I guess my one takeaway from that was the acronym PASTA V. So
Pasta V.
Pasta
Okay.
V. All right, sounds odd, but what it stands for is your shopping center, and what you want to pay attention to in your shopping center retail building is P for parking,
Okay.
A for access, S for signage, T for traffic, and A for anchor or activity,
Okay.
and V for visibility, right? So PASTA V. So as you go and look at a property, and often I've had people, Rafik will call me sometimes, hey, what is, a lot of other clients call me, hey, what do you think of this deal? And I kind of, all right, let's go through the basics here. What's the parking look like, right? So
Yeah.
is the parking convenient? Is there front end parking right in front of the storefronts? Is it easy to get to? What's the parking ratio? So how many, a good parking ratio for a retail development might be 4 or 5 stalls per 1,000 square feet. Maybe more if there's restaurants involved. Access. So how easy is it to get in from the main thoroughfare? Well, I can see it from the highway, but I got to go, around this bend and go through this frontage road.
Yeah.
That's not going to
Right
work for
turn
access.
out, that
Yeah,
type of-
right,
yeah, yeah.
right. So you want as good of access as you can get, because you got to think of it like a consumer.
Yeah.
If I can see something but I can't really get in easily, maybe I'll do
I'll
it
catch
later.
the next one. Yeah, yeah.
Right. So access is important. Signage. So look at the storefront signage. Is there big, bold, storefront signage? Is it easy to see? And then what about monument signage, pylon signage? You want as much signage as you can possibly get, and as much as the city will allow. So
Right.
if you've got storefronts where the signs are kind of hanging down below and you can't really see them from a distance, that's going to be a challenge.
Yes.
Traffic. So you want to be able to look at traffic counts, and so we'll do this. There's a lot of availability software products that'll show you traffic counts now. For free. You can go to the MnDOT website, go there, look on the map, and it'll tell you what traffic count is at the intersection. So I would say depending on the asset class, you might want 15 or 20,000 vehicles per day VPD at the intersection at a minimum. Now a lot of much better product might be closer to 40 or 50 or 60,000 VPD, and it goes up from there. So
Beginner question. Sorry.
go for it.
Is there ever a location, is there ever a type of retail use that you can kind of get away from maybe one or two of the fundamentals and make it work? For example, like if you have, like I was at a martial arts gym and that was tucked away somewhere. Visibility wasn't their primary concern relative to having the type of space that they needed. Is that...
Yeah, that's fair. But I think your rent is going to be commensurate with that, right? So,
Got it.
So if your building is lacking traffic or visibility or some of these, it's okay. I mean, as one of my partners would say, there's a tenant for every space,
Yep.
right? No matter what, there is a tenant for every space. You just got to go out and find it. Sometimes it's a little harder than others, and so. Yes, there are tenants like the martial arts or some other users that, hey, you know what? People know where I'm at. They're going to come find me. They'll Google me and
Right.
get there. But because of that, you're not paying for the Pasta V.
Yeah.
And so your rent is going to be commensurate with kind of how you score on that.
And you might have difficulties, I'm assuming, placing additional tenants in the future if that deal ends up not working out
Totally,
at some point.
yeah. So I mean, it's you just don't have the exposure for the retail. The retail tenant wants to be seen and easy to get to for the consumer.
Yeah. Sorry, I broke your stride on the,
Okay, yeah,
on the
geez,
next
man.
A on the pasta.
Okay, all right. So we went through signage, right?
Signage,
we went through
traffic.
traffic. Now we're talking about anchor. So anchor or activity. Used to be, it still is, the bread and butter has been the grocery anchored shopping center, right?
Yeah.
Ask any
Yep.
large scale investor, I want grocery anchored shopping centers. And why is that? Well, used to be, I don't know what the count is today, but the average family would go to the grocery store 2.5 times per week.
Wow.
Right? So
Yeah.
that's a lot of visits.
Yep.
So it's easy to lease off of. Well, I got people that have to eat, and they're coming into the shopping center, and so I'm going to lease this extra 10 or 20 or 30,000 square foot of retail space to these tenants who are going to appreciate the co-tenancy and the traffic generated by 2.5 visits per week. And so you want to look for that either that anchor or, I say activity because maybe it's not anchored, but maybe it's near some other amenities that might draw a lot of traffic, big employer or some sort of city, maybe a stadium. About that. So
we got some of that happening in St. Paul right now.
Right. So that's important for anchor and activity. And then lastly, visibility. This is a no-brainer. Can I see it? How good can I see it? Can I see it from far away? Are there obstacles, landscaping? Is it up a hill, down a hill? Is it blocked by another building? How easily can I see all of my storefronts in the shopping center? And so that's it. Pasta V. That's what you should.
I'll never forget it now.
There you go.
Perfect.
All right.
So someone who's now looking at getting into their first their first retail investment, how do you do you have any advice for them of where they need to start in terms of getting a better education, reaching out to a broker, what type of assets? What guidance would you give someone? What's the one tip?
So you want to know more about retail real estate and
just in general.
I would say your brokers, your good brokers are invaluable here, right? Because they're going to be so well connected that they know what's going on, who's going where. And as I was talking to one of my younger agents this morning in the office, I said, what I love about real estate is unlike the stock market, there's no SEC, there's no insider trading issues, right? So if you know something,
that's a good point.
I'll give you some examples. That's how developers figure it out, right? Like, hey, I know that this tenant wants to be in this location, and no one else knows it but me or maybe a few other people. Well, you're at a competitive advantage to somebody that doesn't know that. So now you're going to go out and find the site, and maybe it's ground up, or maybe it's buying a strip mall that hey, I know that somebody needs to be here, and if I can acquire the property, I can put them in. So,
and kind of in that vein too, I think there's a lot of people who they try and go the autodidactic approach, right, where they're teaching themselves everything. I don't need an agent. I don't need a broker. I can kind of figure it out on my own. And what I think is really telling is the fact that there's very sophisticated investors out there. Rafiq, for example, will give you a call. Hey, Mark, got a question.
Right.
I think the most successful people all have those broker relationships as well. So when you're early on and starting out, it's probably much to your benefit to reach out, because that's where you're even likely to get the most help is a broker who knows what they're doing, will sit down and take the time and kind of explain to you what the market's like and what they need to know.
Right. Yeah, I would say you're only as good as your circle, right? And so brokers are invaluable, and all we are is information, essentially.
Really.
You can often get the information for free or very, very cheap.
Yeah. Very good. Well, Mark, thank you for co-hosting with us here. Hopefully the next time Rafiq is out of town, you ready to do this again?
Let's do it, man.
All right, good. Thanks for watching, everyone. We'll see you guys next time.